RBA's leading social enterprise show. On the Mic with Mike King Biz, delivering food for thought. To find out more about the dynamic host of On the Mic with Mike, please visit his website at mikekingbiz.com.
Hi, I'm Reba Hollingsworth with CBS 6, and I was on the mic with Mike and had a fabulous time. Make sure you tune in every week.
Ladies and gentlemen, welcome back to On the Mic, Mike Premier Business Radio program. I'm your host, Mike King. I appreciate being here with me. This is part of the Mike King Biz Radio Network, ESPN Richmond, 106.1 every Monday to Friday from 5 to 7 a.m., as well as International Business Talk Radio. We bring you the best and the brightest. So I'm at the Chesterfield Chamber Gala the other day, and somebody says there's a person who I need to meet who has some explosive information for businesses and nonprofits. I talked to a lot of people, and this one was a stunner to me. Sir, welcome to the program. Explain to our listeners who you are and what you do.
Wow, thanks for having me here, Mike. I am excited to be on the mic with Mike.
Thank you.
Pleasure to have met you there the other night. So my name is Dean Francis. I am a partner in a consulting group called One Bridge Advisors here in Richmond. And what we do is advise nonprofits and businesses on qualifying for the Employee Retention Credit, or ERC. If you're not familiar with it, it is an economic stimulus program that will put 6- and 7-figure dollar amounts. Did you hear me say
That's it.
6
or
and
7
figure?
That's
Okay.
a chunk of change.
It's a significant amount. Now, you had to have paid W-2 employees during the pandemic, and it doesn't include yourself or any family members in it. But when we talk about any company that's at least 5, 6, and 7 and up in W-2 employees back during 2020, 2021, there is a very good chance they can qualify. Not everybody does, but most people do, and most people have not done anything about this. It's less than 10% of employers have done anything. They hear the ads and they're annoying, and they have incorrect information coming in, a bit confused. We give people guidance, get them in the right direction.
All right, so Dean Francis is here with us on the mic with Mike. Like I tell you, we bring the best and the brightest out. So we're talking years that are bygone. People in business are looking forward ahead. They survived the pandemic. They made it through. Are they able to go back now and get that?
Yes, they can. If they file this year, or I should say this, if they start the qualification process this year and qualify, they will receive the maximum dollars. If they wait until 2024 to start the qualification process, they'll get about 75% of the money, and then it's over.
And then it's over. Okay, so we had a conversation before when we met, and we had a person who had said they had heard about that, and they asked their accountant, should I do this or do I qualify? And the accountant quick was to say, we don't want to go down that road. Explain to our listeners and viewers what that is. So you're saying it's not typical accounting.
Correct. This is, first of all, let's start with the number one misconception
Okay.
to ERC, which is what you're referring to now. Number one misconception is, and often a CPA or CFO will mistakenly believe this, that you have to have lost a lot of money during the pandemic in order to qualify. So if you remember back, there was PPP-1 and PPP-2. These were loans you could get, okay? Well, a lot of people started to think after PPP-2 that when Congress then said, hey, you can also qualify for ERC, they were thinking, oh, you have to have lost money. And that's not the case. When you start reading it, it's not that we're all going to sit around and read this, okay?
Yeah, I can imagine. It's not exactly most thrilling.
Yeah, it's 200 pages of legislation. It's 165 pages of IRS guidance. Okay, so let me just use my church as a quick story. So, this last year, we're growing, and we, our church is raising some more money.
Okay,
for
1
another
second,
building.
sir.
Yeah.
I tell you, I come from a lot of preachers. You cannot come here and talk about your church without giving a church shout out.
Oh, all right.
So let's get the church shout out the way. What church is it?
Passion Community Church. There's 5 campuses throughout Powhatan, Farmville, Richmond, Aylett, and Riverside.
And which location do you attend?
Midlothian.
Midlothian. All right. And the pastor's name there is?
Brian Hughes.
All right, Pastor Hughes, you just got the big time shout out. And what's the name of church once again?
Passion Community Church.
All right, Passion Community Church. Congratulations and kudos to you. All right, so we can get back to that. Sorry about that.
Yeah, so I asked when in the midst of raising, more funds, I said, have we made any effort to qualify for the employee retention credit? And the answer was no, because our CPA, who's a terrific CPA, said mistakenly, we don't qualify because our giving was up during the pandemic.
Okay.
People weren't spending as much money during the pandemic, and thankfully people gave more to our church, and that's a great thing. But they had set it aside. They were not going to pursue the employee retention credit because of that information. And since then, I helped everybody understand that's not how it works. You can qualify if you can show a nominal impact of partial disruption caused by a government ordinance, directly or indirectly. Anyway, bottom line is, we're waiting for the final number right now, but it's in excess, we believe, of over $300,000.
Okay, so you had said when a lot of times people looked at that, they had said their business was disrupted, lost money, and a lot of times people stopped right there. They didn't go to say how their business was impacted. Explain to our listeners again, like you told me.
Yeah. So when you just read the headlines, it says if you had a substantial loss in revenue, or if you were partially or fully suspended, people stop reading.
Stop right there. We're good. Okay. I don't qualify.
And I think, oh man, I didn't shut down, and I made money. I did okay. It was not easy, but we did okay. And they stop. Well, if you keep reading, what it actually says is if you had a vendor or that was shut down, or if you experienced a supply chain issue, or maybe some travel issues, or there's others, all these factors, you are considered partially shut down.
That changed the game for a lot of people. A lot of people were impacted by those things, whether it's supply chain issues or government ordinance. Now, all of a sudden, they possibly could qualify. What is the process for this right here to explain people? How do they engage you? And what should the average business owner do now?
So for most employers, and people can call us first, okay, we'll consult, and it doesn't cost anything, and make sure this makes sense for them. But for most, they need to retain a tax credit specialty firm. These are specialty CPA firms. They have their own in-house CPAs, tax attorneys, preferably a forensic accountant. They have probably $1 million in software. And since 2021, this is all they do. And so you retain one of them. They will then go in and do a deep dive analysis on all 7 eligible quarters. Their hope is to get you qualified for all 7. They might not be able to qualify you for any, or maybe some of them, but they're the best. They know how it all works. And on the other side, assuming you have good news, you qualify for this money. They work on contingency. We have firms that we found that we think are great that will keep it to a 20% contingency fee. Other firms are taking 25 and 30. Bottom line is there's no risk to the employer to go through that process.
So let's talk about, and we've had to talk about, you spoke about your church. Let's talk about the nonprofit aspect of it too, because this helps nonprofits, and what nonprofits need is dollars.
Correct.
They need help.
Yeah. So when Congress revised this ERC twice in 2021, one of the things they did was they made it available to nonprofits. So if you are a part of a church, a ministry, a nonprofit, a private school, and you had at least 5 full-time W-2 employees. Okay. If you had less, call us. We'll give you some advice here. But if you had at least 5 full-time employees, then there's a very good chance you can qualify for this money. Number 2, what we're doing at our firm, One Bridge Advisors, is anyone that is referring people to us, we'll make a charitable donation to their local Richmond charity of $1,000 to $5,000 per referral who qualifies in this program.
And so the process for getting approved is about how long you had said?
I would say to plan on about a 12-week period of time from start to finish.
So now you have to take advantage of this during 2023, is what you're saying, is at the end of 2024, it's gone.
Correct. If you start into that qualification process this year, you'll be able to file by April 15, 2024, meaning you'll get 100% of the money. If you wait until next year to start the qualification, you'll get 75% of the money. And by the end of 2024, you're pretty much done.
No out-of-pocket expense, no exposure. What would be the downside? And you hear people a lot of times, what's the downside for a person saying why they aren't going to do this, or I don't know?
I find anyone that'll take some time to learn and understand more, I think it's 99.9% will say, you know what, I need to at least try. I think the fears that people have are just coming from, I don't know, just things they heard. They really haven't talked to anyone that understands it. Every once in a while, I've had a business owner say, well, I don't want to have an audit. Well, that's why you need to use a specialty CPA firm that's got tax attorneys to make sure that this is all done properly. Just like anytime you file anything, it's very important that it's accurate, it's compliant, you have documentation. But as long as you've done it right, then you're in great shape. And these are all firms that take full responsibility for the filings. They typically carry $1 million of errors in emissions insurance, and for any reason they've made an error. But these are just really high quality places. And by the way, Mike, this is much different than going to a company that's advertising. A lot of these ads, there's cold calls, cold emails. And I know I might step on a toe here too, but even the payroll companies that are saying that they do this, yes, they can, but they typically get some of the low hanging fruit on ERC. So let me just give you an example of what I mean by this. So I have a friend who has a restaurant, and he went through a payroll company that does this work. It was $120,000. And he was excited. I mean, it's $120,000.
Yes.
Okay. And so his brother stopped him and he said, no, listen, before you file, you have a specialty CPA firm that does nothing but this. Look at your case first. And he said, okay, sure. What the heck? $297,000.
Okay. He was good at 125.
Yeah.
He was very good.
Right.
But 300.
Right. It's just there's a difference. And what we found was there's not all that many that do it. But anyway, we found what we think are the best, and makes it simple.
Alrighty. So ladies and gentlemen, on Dean Francis here with us, what you need to do. I talked to a lot of businesses that are out there. These seem to be uncovered gems right here. This is opportunity for dollars that are out there for you to support your business that a lot of times people didn't know about. Like you said, when they got to the part about total shutdown or disruption, people stopped there and never went on. All right, Dean, how can people find you out there, sir?
They can go to onebridgeadvisors.com, onebridgeadvisors.com. And if they are an employer and would like to consider this, they can just fill out a form right there. We'll schedule a call about 20-30 minutes to get to know them, find out more about them, and help them determine, is this worth their time and attention? If so, we'll give them some next steps, whatever those next steps might be. Also, if you have a local charity that you love, go to elevaterva.com, elevaterva.com. If you would like to introduce more employers to us, we would love to make a charitable donation back to a charity that you really love here in Richmond. You and I were talking earlier how many great ones there really are.
Shout out to a good friend. We had just talked about Stephanie Becker, Better Together, her as well as Jill Chickowicz with To End the Stigma. So Dean Francis, Mike King here. We got to run, but this has been some great information, sir. Thank you for that right there. This is why we are the best business radio program that's out there, hands down. On the mic with Mike. We'll talk to you soon. Thanks now. Take care.
Pleasure to be here.